In today's video, we are going to be talking about the future of the global financial system, gold, silver, and we are speaking to Collin Kettell. Recently, we were talking about Nevada King Gold on this channel, and we have the entrepreneur behind that here today, and all around one of the more successful people in the gold and silver mining stock arena. So make sure you hit the like button on this video. Give us your gold price prediction in the comments right there down below for 2021. And it's nice to meet you, Collin.
Hey, Jake. Thanks for having me on the program. Love the show.
So what made you realize that gold is important right now?
I like to say that I got into the gold space a bit by default, so I can't say that I'm any type of a genius. My father started investing in the space when I was 11 years old, and I saw a commodity super cycle play out from 2001 to 2011. And then I saw kind of the correction, if you will, that happened from 2011 to 2015. But also noticed that there was a lot of fundamentals in place that made me think that it was just going to be a correction, and the all-time highs in gold had not played out yet. And everything is pointing to that today. It's almost written on the wall now, but a few years ago, people like you and me were a little bit more contrarian on the problems at hand. And I think those problems are going to lead to a lot of people getting into gold.
So when you were younger, then did your dad teach you about gold and the financial system? That's a pretty interesting background.
Yeah, looking back, it was very fortunate, very cool. So what happened is he was an electrical engineer. He was working for NASA and Lockheed Martin, doing things for the space station. And for some reason, he decided that he thought commodities were a great place to start speculating in 2001. Hindsight, perfect timing. I don't know how he picked it. I was entrepreneurial at the time, mowing lawns, and thought I was doing really well, making $15,000 a summer. And he started coming home saying, "Hey, I made $100,000 today on these Canadian penny stocks." And so very quickly, I didn't really care about mowing lawns anymore. And instead, all I wanted to do was talk to him about what is a Canadian junior stock? What is a warrant? What is an option? What are grams per ton of gold in the ground? And so for about 5 or 6 years, we would spend an hour every day taking a walk. And I think it must have been a painful process for him, because being that I was 11, 12, 13, 14, the ideas didn't really sink in immediately. But looking back, it probably absorbed a lot more than I would have realized at the time.
What a cool story. How old were you when you bought your first gold stock?
Probably 16.
That's cool.
Obviously not in my own name, but yeah.
That's awesome, man. So now today you're, buying land, building gold companies. So it's kind of cool full circle, huh?
Very cool full circle. It's like anything, it's a process to learn that 10,000 hour rule, or whatever the math is to it, I think is true. And there's a lot of trial by fire. I was able to absorb a lot from him, but then there was so much that you have to learn on your own, and passion kicks in once you get good at something, and then that's how you really become great at something. And that's something I'm still working on, but we're having some success, so it's great.
Yeah, that's amazing. So tell me a little bit about your new project, Nevada King Gold, that you guys just have really kind of emerged recently. Tell us a little bit about what's going on.
The way I tell the story is, back in 2015, I met a geologist named Denny Laviolette. He's a few years older than me, but quite young. And we decided that we wanted to go pick up properties, because in 2015, gold, as you recall, was bouncing around $1,000, and trying to convince people to invest in gold, let alone pick up gold projects, it was very little competition. We recognized that, and we thought we could go out and raise some money. So Denny was a Canadian geologist. I saw my dad do what he did in Nevada. And there was this dichotomy that he wanted to focus on stuff in the north, and I wanted to focus on stuff in Nevada. And so we founded it all under one company. And that company is now Newfound Gold, which IPO'd in August of last year. It's now a $1.5 billion market cap. It's the largest exploration company on the entire venture exchange. And what we did about 3 years ago is we spun the Nevada assets out of it. Very similar concept. We picked up a lot of ground. The difference being newfound gold, we picked up ground in a brand new jurisdiction, which is Newfoundland. And Newfoundland's eastern Canada. It's a small island that now we're proving is potentially very prolific for gold, but it's not an established gold trend. In Nevada, we did something that I think people can relate to far easier, which is we went into Manhattan or London of your gold real estate market. We went to the #1 most prolific gold mining trend on the planet, which is called the Battle Mountain trend. And things were so bad in 2015 that these companies were dropping ground. You're talking about Newmont, Barrick, Kinross, the big gold producers were actually dropping their ground because they had made such horrible mistakes for their balance sheets in the years preceding that they had to cut everything and anything to survive. And so we went in and picked it up. And that's the genesis of Nevada King. Is we have great ground and we have a lot of it. So we're, to put in perspective, the 4th largest landholder in the entire state of Nevada. The only companies that are bigger holders than us are Barrick, Newmont, and Kinross. And there's not a single other junior gold company in the top 10 list that registers. So we're kind of in a field of our own. We, as you mentioned, went public about 3 months ago, 2.5 months ago. And now we're turning our attention away from acquisition. That window is closed. We took advantage of it. And now we're moving towards, let's get some eyeballs on the ground packages, and let's unlock the value that we see, the obvious value in the ground through exploration.
Until I was researching your company a little bit, I didn't actually realize how prolific Nevada really is.
Yeah, so let's just to put some numbers on that. Nevada, if it were its own country, would be either the 4th or 5th largest gold producer on the planet. In terms of Nevada as part of the United States, Nevada represents 80% of all gold production per year in the United States. So it's far and away. And in terms of a mining jurisdiction, there's something called the Fraser Institute, which takes a whole bunch of factors like political risk, friendliness to mining, permitting processes. Anyway, Nevada weighs out and has for the last decade as the #1 most friendly mining jurisdiction in the world, which is very important. Very, very important.
Yeah, especially with, so much political and government uncertainty globally in the world right now. Give me an idea of your expectations for gold moving forward from a macroeconomic type of landscape. You and I are within a couple rocks throw in age apart from one another. And I look at what's happening and it kind of perplexes me. And I want you to, tell me what you see and how you think it can aid gold moving forward. A lot of people our age maybe aren't even as interested in gold. So tell me why you think that it's a compelling investment.
I don't want to give an unsatisfactory answer in terms of a number. So I think gold's going to blow through $2,000 this year, and then I think it's got quite a bit of room to go. When people throw price targets out like gold's going to $5,000, it's an exciting number, and people say that because that's the kind of number that investors are looking for. And I actually think it's quite realistic that gold could indeed go to that kind of a number. People forget that in 2001, when I started watching my dad invest, gold was at $250 an ounce, and it ended 11 years later on that epic run at about $2,000 an ounce. So an 8x appreciation off of its recent low of 1,050 would be, well above $5,000. I don't think that's out of the cards. In terms of what it's going to take for gold to get exciting and move, the inflation narrative has started to pick up. You and I were preaching this a year ago, and we're talking about it 2 years ago, but it wasn't until maybe 3 or 4 months ago that you started looking at Drudge Report, Fox News, whatever channel you'd look at, and it'd say inflation. And so then the gold bugs, we start getting a little bit anxious. Well, why is gold not going up? Well, I can't say that I prophesied this because I didn't. I'm just trying to look now and say what's going on. And what I've concluded is people are acting right now like inflation is rampant. There's money being thrown around. And people are not happy to sit on that money. That's why they're depositing that extra cash they're getting in their Robinhood accounts, in their Coinbase accounts, and they're chasing things that are exciting. People don't want to buy something that doesn't have excitement. It's not human nature. And so what they're seeing is, at least up until very recently, that every time they open their Robinhood and their Coinbase account, or that they look at the value of their house on Zillow, it's going up. And so they're very happy to see their perceived value in the bank going up. What's going to have to shift for gold to start to really get a bid is we're going to have to see a slowdown in the value of assets, financial assets, against what people are paying at the pump, paying at the grocery store. And that's going to click in people's mind. They're going to say, my feeling of getting wealthy this week did not exceed the pain that came out of my bank account. What do I do? And it's going to be like this, like it's going to click and people are going to buy gold. And gold is a fantastic story of fear when it kicks in. And it just takes that moment. I don't know when that moment's going to come, but I think we're actually seeing it start to unfold now.
It's funny you said that, because I was talking to a guest yesterday and you said when it happens, it'll happen really quick. And that's kind of my feeling, because I've noticed more and more that your everyday person is now aware things are more expensive than they were 18 months ago. Whereas before, as you said, we were kooks, or it's a little conspiracy oriented. But now you're seeing it, and I don't have the news at my house, but I went over to my wife's grandma's house yesterday or the day before, and she hit the news while I was sitting right there. The first word that came on was inflation. I said, wow, I've never seen this covered on the news before. This is really mind-blowing to me. And it seems like it's starting to happen. And then once it clicks, it's like, it's, I wouldn't call it instantaneous, but that's kind of what it's a psychological shift, right?
It totally is. And not only that, but some people are unaware of why they're doing things, and it is to protect against inflation. They just might not understand what inflation means. Other people are actually spinning narratives to themselves and to the world about what they're doing and trying to justify it as inflation. And I'll use the concept of cryptocurrency as exactly that. Philosophically speaking, I love cryptocurrency. I don't know what your opinion is on it, but I'm pro crypto. I don't own any Bitcoin, but I see it. I like it. It sounds really cool. People think they're buying Bitcoin to protect against the dollar, but what they don't understand is Bitcoin and crypto is moving up right now because of a risk-on environment. It's a new technology, so that's probably what is causing this epic rise. It's not really something that's proven as protection against the dollar. In fact, as we saw the other day, you could lose 30% of its value in a day. Gold is the asset, and has been for thousands of years, that protects people against the volatility and also the downside. And it just is going to take a educational moment. I think the educational moment is going to be gold going up. The mere fact that gold starts to go up, and it'll facilitate people's understanding. It's like a re-education. People haven't had to buy gold this generation, and they're going to have to.
Yeah, I own crypto and Bitcoin as well. But one of the things that I find interesting is the comparison between the returns. And when people say it, I know they don't even understand why you own physical gold coins or gold bars. You don't do that. You don't go and count it and pull out your calculator and say it went up like this. But what I think most people don't get is that if you're going to compare returns, it's better to compare the junior developers and explorers, kind of like the business model that you have today and that you saw happening for your dad. Like, you saw those kinds of returns. And so talk to me about why these types of junior developers and explorers, and do you agree with me that those are more the returns that I guess you could compare if you really were to?
For sure. So rather than me dabbling in forward-looking statements, I'll instead use historical anecdotes. My father made about 100 times his money from what he put in 2001 to 2011.
2001? That's so awesome.
Yeah. So you're absolutely right that the speculative money that people like is available in the gold space. And in fact, the public market around commodities is the most volatile public market historically over the last 100 years. It provides the type of returns that you would see in the technology space, for example. So one way to think about this is gold is the underlying asset for mining companies. Very simple way to think about it. It costs a company, say, $1,500 per ounce to produce gold in the ground, say Newmont. Well, if gold's selling at $1,800, if gold is quoted at $1,800, they're making $300 of profit per ounce that they produce. If gold all of a sudden goes up to $3,000, you're looking at a 30% price move in the commodity, but that's going to make the company go from barely being profitable to being extremely profitable. And so you can see the kind of leverage start to play out in the biggest gold companies. If you move down to the juniors, these are companies that are not based on any type of normal value metric that we're used to. The closest comparison you can take is startup companies in the tech space. And I draw on that analogy a lot. It's a great way to explain it. You've got, in the mining space, you've got Newmont, Barrick, Rio Tinto. And in the tech space, you've got Microsoft, Facebook, Apple. Those are the companies that produce profits and actually have recurring revenue. They look below them to a couple thousand of these companies. Some of them become unicorns, and they're willing to vastly overpay to acquire those things when they become successful. When an app attracts people like an Instagram, Facebook's willing to come in and pay $1 billion. Well, same thing in the mining space. The majors have to focus on production, and the juniors get to focus on finding new deposits. And when one of them finds a deposit, they are going to be able to sell that in many multiples of what it costs their shareholders to find it. And that's where you get this asymmetrical return. And the final layer to put on that is the cycle is the #1 driver of those values. So remember, for tech, 1999, we can even say maybe year 2020, you're getting exuberance in that space where no matter what your app is, no matter if you have 100 people in it or 100,000, you're able to raise money and it feels like you're making money. Well, the same thing happens in the gold space. In 2015, every project was losing money. And in 2020, every project is starting to get a bid. People are pouring money in. So the cycle is what drives the money making.
Amazing. Well said. So David Morgan is famously quoted as always saying that 90% of the move happens in the last 10% of the time. And I've been thinking about that because I've been thinking about the psychological phenomena of inflation and money velocity picking up. And, you touched on that too, where it happens like this. Have you experienced that 90% in the last 10%? Do you think that's the type of quantum move that developers and exploration companies can give you if you're at the right time of a trend?
Yeah, so I think the last time that we really saw that play out would have been 2011. So back in 2011, you had a period where gold stocks went from being pretty obscure to people like Jim Cramer were talking about them on television. And you had a significant influx of capital that had probably already reached the institutions, and then it was clamoring from retail. And that's where you had that event where if you look back, a lot of the charts went parabolic, and that's the phenomenon that David Morgan's talking about, where you get that huge move at the end. We haven't seen that yet. We haven't even come close to that yet. What's happened, if I were to characterize the last 5 years, is 2015 was the bottom. It took from 2015 to 2018 for the majors to make the appropriate cuts. That included dropping ground in Nevada, which companies like Nevada King went in and picked up. It included selling off non-core assets. It included cutting staff. By 2019, these companies actually were incredibly robust in terms of their balance sheets. You look today and Newmont, Barrick, all the majors have far more cash than debt. Some of them are actually debt-free, like Kirkland Lake. And so you've now got the environment where these companies are going to be willing to take risks. Also, as gold prices go up, they begin to want to start to replace reserves. Mining companies are always mining, which means they have less gold proven in the ground. And the way that they deal with that is twofold. They either continue drilling around that deposit, or they go out and they seek a new acquisition, a new discovery, a new mine. So what you're seeing is this trickle down effect that's really starting to happen. You're seeing more acquisitions. The majors are ready to take risks again. They're incredibly strong. From the market side, institutions are starting to come into gold, but it's early days. And we're so far away from the exuberance. I don't necessarily mean in terms of time, but in David Morgan's explanation, we're not into that 90% move yet. So, there's going to be a tremendous amount of money that flows into gold. I think something like what happened back in the 70s when the inflation stagflation trade was happening in earnest and everybody understood it. Nobody's talking about gold right now.
So basically you kind of painted this macro picture. And when you get down to the nitty gritty of the market and you insert Nevada King into this equation of fitting a very specific need, and then you look at the bigger players like Barrick, I forget the name of their CEO, but he has said essentially that there's a crisis in the mining business and there needs to be consolidation and there's depletion of reserves. David Garofalo said that numerous times on our show. Is that a real thing? And is that if the point of a business is to serve a need in the market, was your company created to solve that specific need?
Yeah, it was. And Nevada King is a unique beast. And this is why. Most junior exploration companies start with a concept from a smart technical person. A geologist wakes up, says, I've always liked that project in Arizona. I can go stake it right now, or I can go buy it from my friend. I'm going to raise money. And then they spend money and they hope to find something. The success rate is very low, but when they hit something, it's becomes an asset that appreciates, and a major like Barrick, Mark Bristow, the CEO of Barrick, might say that's big enough that we would like to own that and we're willing to pay. Nevada King is so much more than that, because we looked at the big picture. We didn't get stuck on, hey, there's a nice project over there, or there's a nice project over there, let's raise money and drill it. We said, forget that. We're going to go in and pick up all of the best ground in the very best jurisdiction that we know of, because the opportunity is here. And so what we've assembled is 12 projects that are all district scale. Every single one of them is massive. So district scale means you're talking hundreds or thousands of acres. These projects are within the main trend. They're close to producing mines or resources. And this is an area that cyclically, so going back to my discussion earlier, the cycle drives the money. Every single cycle, money pours back into the Battle Mountain trend. And so the bet that we made is twofold. One, we think there's a good shot that we can find something, or that somebody adjacent to us on other ground is going to find something, which will drive the value of our ground up. And two, money is going to pour back in, which is already happening. Barrick and Newmont that dropped this ground are going to go, oh, we know why we had to drop that, but our coffers are a lot deeper now, so maybe we should go ahead and get that ground back. And that's going to cost them 100 times what they would have paid had they just kept it. But that's just how these cycles work. So that was the thesis from the beginning and still is.
Good stuff. I love that. So how do you have the psychology to go in and buy at the low when, Barrick and Newmont are saying we don't even want this?
I think a lot of that psychology is almost built into a person. I've always found myself to be contrarian, and being contrarian is always talked about as being the way to make money, but you can make a lot of money not being contrarian. It's not the only way. I find that I've always been one to go against the grain. And that works very well at the bottom of the market. It probably becomes a little harder to have that internal battle as everybody does pour into gold. And to David Morgan's point, if you sell too early, you miss that 90%. So you have to, constantly put in context, where's the market? How much further can it go? And that contrarian in you has to be suppressed a little bit to not give out too early. But I just knew in 2015 that things were bad and things don't stay bad forever. And, looking back, it was definitely a good call.
So Let's talk a little bit about the larger scope of the financial system. We talked a little bit about gold. We talked a bit about your company. Now, when you look at the overarching world that we're in right now, what do you think are some of the next moves or the next dots that click? Are they able to put inflation back in the bag, or does this phenomena continue to pick up? The money printing, you and I are technically, you're in an American territory and I'm in America as well, and we're seeing an incredible amount of money printing, the debt getting quite incredible. I have a 9-month-old baby, and I look at it, I'm like, I'm not sure this is making me feel that comfortable. And I'm wondering, when you step out of specifically the gold market, how do you see this playing down? Do we just continue to print until they create a new dollar? How do you see this moving forward?
I'm trying to analyze everything that's going on and then make as educated of a guess about what's going to come next as possible. And what that all leads me to is, remember, the United States is the reserve currency. And so very much so what we do impacts everybody. But also a lot of people are following suit. And so on a global scale, maybe pull China out of the equation because they're actually kind of acting a bit differently this time. But the money printing is rampant everywhere, and most currencies and most economies are pretty tied into the dollar. There's a series of levers that the Federal Reserve has and that the government has. They understand those levers very well. They do not fully grasp, even though they'll never say this. Powell will never come out and say, we're not sure what's going to happen, because he can't. But they don't know exactly what's going to happen. Jeffrey Gundlach had a great interview last week. If you just go to YouTube and type his name in, talking about inflation. But he also brought up the point. He said, look, these guys might be smart, but they don't know. We're in uncharted territory right now. COVID, the whole thing that just unfolded, this surprise of having to inject so much more capital, they don't know what inflation is going to be. And all we have to do is look till last Wednesday when the CPI numbers came out. The consensus was that there'd be a 0.3% move up on a monthly basis for CPI, and it came in at 0.9. So the market didn't get it. The Fed didn't get it. What did it tell us? It told us, well, for right now, inflation is maybe a little bit worse than people anticipated. My guess is that that's going to continue. If the Federal Reserve tries to tighten right now, the stock market is going to come off. If they tighten in a way of raising interest rates, they're going to up the amount of money it costs to service their own debt, for which has ballooned. I think the most comfortable place that the Fed can get into is to be in a period of inflation without there being fear. And my guess is that the fear is not something that is going to be controllable, but inflation is going to lead to higher gold prices. And if we get into a truly inflationary environment, that's when gold prices will really get out of control, if the Fed loses control.
Fair enough. So you've done very well in business with many different of your gold and your silver projects. Give us an idea of some of the success principles that you've learned building successful businesses that are important to you, that someone listening that's looking to take their finances, their business, their life to the next level. What's worked for Collin?
I don't want to give a boring answer, one that everybody else gives, so I'll try to insert some other stuff in there. I put an article out last year, about 14 months ago, and this is very specific to the junior resource space because that's what I know. I don't want to try to opine on other areas that I don't. And the article is titled, "The Easiest Money That You'll Ever Make in Your Life is in the First 12 Months of a Junior Bull Market." And the reason for that is asset prices were so cheap last year, the junior stocks across the board, they were all so cheap, whether they were good or bad companies, that you could indiscriminately invest in them. We like to do that through private placements. So we're actually giving money to a company and they're issuing us shares and warrants, not just shares. So we get like an extra upside. But the point being is everything was so cheap. And because the cycle is the number one driving factor, we felt confident that if we got the best terms, we did not have to focus on quality as much. That whole thing has changed. That's behind us now. And in order to really capitalize on the next few years, you have to pick good teams. So good teams typically mean groups that have shown that they're serially successful. They can raise tens of millions and sell projects for hundreds of millions, because in this business, you want to be trying to make a 10x kind of capture with the amount of risk. And you also need to focus on a credible business plan. There's, if you're going to focus on the majority of juniors where there's a geologist behind it saying, I think there's gold here, that's okay. But spend the time to understand their theory, talk to them. Do you get confidence exuded from them? If they're wrong, do they have the ability to salvage the share capital of the company and pivot to something else? Or is this a dreamer that doesn't understand the capital markets? Because you can get really hurt in that situation. If you're looking for something that's not as tied to an individual idea, maybe look at something like Nevada King, or look at something that's already in a serious discovery like Newfound Gold, not to tout my own companies, but there's all different kinds of flavors out there to pick from. And it really boils down to your risk tolerance. If you want to make 2 to 5 times your money, my guess is you could buy Newmont and Barrick and sit on a totally liquid position. And you probably, if gold goes up high enough, make that. But if you're looking for the 10, 20, 30 bagger stories that we all hear about, you're going to have to drop down into the juniors and get a little bit more creative. And that's where you need to understand and get the filters that you can apply to what works and what doesn't.
So let's end on the mindset of absorbing that volatility. And especially since the August, September high in the gold and silver price, there many of those juniors had retraced quite a bit. And, the volatility seems to be someone like your same thing you saw with your dad. You're able to handle it differently, where someone else may exit, then they take the loss, and you're able to move through it. Rick Rule says that he knows in advance of buying one, he's expecting it to go down 40%. And so can you talk a little bit about that and what you've learned about that and your advice to maybe a new investor in this resource space?
Sure. To Rick's point, there's no rhyme or reason, or let's say way to decode what's going to happen, because the volatility is just present. And there's a boogeyman that controls all of these juniors. And what I mean by the boogeyman is that whatever the gold price does is going to affect what the world of juniors does. And nobody can predict. We think gold's going to go up long term. I firmly believe that. But there's nothing to say that gold's not going to drop $200-300 several times along the way. And that's the kind of move that can crush these things by 40%, like Rick brings up. So you need to, first of all, only play with money that you're comfortable losing. I hate to say that because it's so cliche, but it's important, because if you are using money to invest in these juniors that you might need to access in a month or 2 months for paying for something else, you're setting yourself up for a not so good situation, because chances are you're going to get caught on the wrong side of that trade. So, the obvious things, just do the research, maybe average cost in, because even Rick Rule and Eric Sprott cannot tell you where the bottom is. These guys are taking longer term educated approaches. And, you've got to be just willing to ride the volatility out. There will be plenty of it.
Awesome. Great stuff. Appreciate it, Collin. Let us know where we can find a bit more about Nevada King. And we appreciate you coming on. Let us know where we can find out more.
Yeah, perfect. So Nevada King has a couple ticker symbols. If you're buying in Canada, it's NKG. And if you're buying in the US, it's VKMTF. Our website's nevadaking.ca. And we have a commitment with all of our companies that if you send us a email, there's a form on the website. But you can email me directly. It's COLLIN, Collin, at nevadaking.ca. We'll answer you within 24 hours, and usually within more like 24 minutes. So love to hear from anybody. Any questions, fire away.
So thank you for listening to this video. Make sure you hit the like button on either side you see it to send this out into the YouTube universe so more people see this video. Give us a comment down below and let us know your gold price prediction. If you enjoyed today's episode and you want to see more of it, give us a comment right there down below. Be sure to hit that subscribe, that bell notification, and thanks for watching. We'll see you next time.